Hello everyone and welcome back to our live stream. In this class we are going to be teaching you market blocks. So my name is Mubarak Bello and I'll be your tutor for today. So let's dive right into it. There are two types of market blocks. There is a breaker block and then there is a mitigation block. We are going to start by looking at a breaker block. So what is a breaker block? A breaker block is basically a failed order block, causing a shift in market structure and acting as a level of support or resistance for the price. Why is it called an M pattern? So a breaker block, if you look at it correctly, you are going to see it like a giant M. So it is called the M pattern because it looks like a giant M. So um a breaker block is a point in price where smart money use for entry or exit point. Like for example, when price, those smart money that went in long here, and then price broke above this high, then broke lower. So as price comes back into this breaker block here, failed order block, they are in there mitigating their losses. And then those that are waiting to see price take this swing and then create a breaker block here, they are in there going in at market price, going in selling the market. So a breaker block can work if you have few things in line. What are those things? Your daily bias. If your daily bias or your bias your bias is bearish and then you see a bullish breaker, it is likely going to fail because it's not in line with what price is going to do. But if your bias is bearish and then the sentiment too is bearish, and then you saw something like this, a bearish breaker block, it is likely going to hold because price is in a bearish sentiment. So the formation of a breaker block is formed using three price swings, as you can see A, B, and C. The first price swing here, that's where your order block is going to be. That's your first price swing. Then the second price swing that is going to take the liquidity above this first price swing here, creating a higher high, and then into a higher time frame PDRA, be it fair value gap or another breaker block on a higher time frame, or other block, anything higher time frame PDRA, then breaks lower and break below this other block here that was created, that was supposed to act as a support to market, and then it broke it, making it act as a resistance. Then the price that comes back and then respected it. So let's go in there into a real chart and then I'll explain it to you so that you understand further. So this is USD JPY price, and as you can see here, you have price has been inclining, bullish short term. It has been going higher, higher, and then higher. And when we reached here, this swing here created an order block, right? And then as price came here, it took the liquidity above here, creating a break of structure, and then boom, reject it. This sudden drop here, trap traders that are net long here, those breakout traders or those traders that are net long here, this is a trap here. Once you see this sudden movement here, just anticipate it as a trap. that is trapping traders, catching them offside. So breaking below this low here, and then as price came back into it, this order block here, this order block that is meant to be a bullish order block, and then now look at it, it's now a bearish, acting as a resistance. And look at the reaction, look at it, very nice delivery. So this is the first swing here, and then this is the second swing, then this is the third swing here. So let's go into another chart so that you can understand furthermore. So this is Euro USD chart, and then as you can see, just like before, we are inclining a little bit. Then watch here closely. Look at it. The first price swing here, and then boom. Look at it. First price swing here, and then took the liquidity above here, trapping traders. Look at it, very fast. It went up fast and then came back very fast. So this here is trapping traders, catching them offside, and then boom, look at the reaction, rejecting it very fast. This order block that acted as a support to price, look at it. This order block here, price hit it here and then went higher. Look at it, hit it here and then went higher. So this order block is likely going to hold because um markets trap traders here, catching them offside. So markets do not want them to profit, so it will leave there immediately so that it will not give them another opportunity to get in and be profitable again. So as price came back here, look at it, look at the reaction to the tick, and then boom, reject it. So one characteristic of a breaker is it is very fast. It is very fast because um it has what we call a turtle soup, or what we call um um fake out. Yes, a turtle soup, or what we call a fake out. So trapping traders offside so that it will move very fast, but it will take traders out so that they will not catch the majority of the movement. This is what it was doing here. Look at it. It went in very fast and then came back. Look at it, taking the liquidity below here very fast and then leaving the place. Look at it. As soon as price tapped here, it left it very fast. Look at the reaction, very fast. Let me go back so that you can see. Look at it. As soon as price tapped in, look at it, it left there very fast, very fast. So that is one of the characteristics of a breaker. So the pairs that mostly you are going to find a suitable breakers are GBP USD or Euro USD, or in the futures Nasdaq and US 500. That is a mini S&P. Yes. So let's go to our next lesson. That is mitigation block. Mitigation blocks. What is a mitigation block? This block is the reverse pattern indicated by a failure swing or lower. This block is a reversal pattern indicated by a failure swing higher or lower in bullish and bearish respectively at a strong institutional reference point. So now think of it this way. A mitigation block is like a confirmation for your market trend or direction. Look at it. Market has been creating a higher high and higher lows here, and then suddenly market creates a lower high and then creates a lower low here, clearing lows. that are supposed to be a higher low, clearing it, making this an intermediate term high, and then into a higher time frame PDR. And then as price broke here, it came back, respected a um bullish this bullish order block, and then broke below it again. So smart money use this as an entry mechanism, but most of the time they use this as more confirmation or an exit mechanism when they are caught offside. What do I mean when they are caught offside? When price came here and then smart money are net long, and then price didn't break above this high, and then boom, break below this low. When price came back here, just like the breaker block, it's price money, smart money will use these points here to offset their long position, to mitigate their losses. Okay, they use this to mitigate their losses, not cut them all, to mitigate their losses. They offset their losses at a mitigation block. So let's go into chart so that you are going to see it. Just like the M pattern, mitigation block are also formed using three price swing: a higher high, a high, a low, a lower high. This swing here is creating a lower high, failed swing, then a lower low, then boom, look at it. So let's go into price so that you can see it clearly. There are different types of a mitigation block, but this is just the simplest type. A breaker block can also be a mitigation block, but that's for another lesson. Look at it. Price from here rallied higher. Look at it. Here creates a break of structure going higher, and then boom, break below here. Look at it. Broke below here, taking the liquidity below here, and then boom, just like breaker, opposite of breaker, refuse to create a higher high here, and then look at it, it rejects it. So this order block here, that was meant, that was supposed to act as a support for price, then boom, broke, and then now it is acting as a resistance to price. Look at the reaction. Boom. It is not as effective or as fast as a breaker, but yeah, it is a very good BDRA, or it is very good for confirmation and and offsetting of losses here. So hope this is helpful. Don't forget to like and subscribe to my YouTube channel for more videos like this, and then see you in the next episode.